एशिया है ना सर। धूप अब देखिए 1 बजे का टाइम, पीक पे धूप है। हाँ, पार्टिसिपेंट्स आए इसने अभी, लिंक गई लाइव, सीधा यूट्यूब से भी वो लोग ज्वाइन हो जाते हैं। कोई है नहीं क्लास में। हाँ, a very good afternoon to all the participants. Hope you all are doing good. May God bless you all. Myself, Praveen Singh Chauhan, having taking commerce class, and we have designed a 21 days program for you, wherein you will be taught all the topics of your intermediate first year commerce subject, which are divided into two parts. Part one is theory, part two is accountancy, right? We would try to cover all the topics, whether it is theory or accountancy, in such a way that you'll be able to do it in a very good manner in your advanced supplementary exam. Okay, and do crack the exams with confidence. Many a times it so happens that though you know the solution, though you know the answer, but because of the phobia of exams, you will not be able to, present it on the paper. That is one reason where you will lose marks, and you will not be successful in the exams. Try to win over your fear of exams, right? So as I said again, we have designed these classes in such a manner that after 21 days program, the level of confidence of yours will be at a peak, and you will be able to crack these exams with confidence. All the best. Without wasting much time, let us start the topics. Okay. So, and one more request, all of you, please be ready with your textbooks, academic textbooks for commerce and accountancy, and a notebook. Okay. And there will be few key points I'll be sharing with you during the class. You please take a note of it. Okay. So, as you all know, your commerce subject one second, there is some technical issue. Yeah. So, as you all know, your commerce subject carrying 100 marks are divided 100 marks of your commerce paper 1 are divided into part 1, that is commerce theory, and part 2 is accountants. Okay. Theory, somehow, after giving important questions, you can learn, you can by heart, you can crane. But the problem comes with your accountancy part. So we'll begin with the accountancy part. We'll cover these 50 marks of accountancy in the first 2 weeks. And the last 1 week we'll have for our commerce part, where I'll be explaining you very, very important questions, and which I'm sure you'll definitely get in your advanced supplementary question paper. Okay. So this is how we have designed the program. Let us discuss the weightage of marks in accountancy. Right? Let us start from the last. You have final accounts for 20 marks. You have 3-column cash book, or you'll have an internal choice here, bank reconciliation statement. This is for 10 marks. Then you have personal ledgers and subsidiary books. क्या हो रहा लाइक सर? Okay, so final accounts for 20 marks, which is compulsory question. Then we have 3-column cash book. Ten marks. Here you have an internal choice. Either you can attempt 3-column cash book or bank reconciliation statement. Then we have personal ledger for 5 marks and subsidiary books for another 5 marks. And then we have journal entries for 2 marks. We have trial balance for 2 marks. We have journal proper for 2 marks, and some theory questions we'll be having. Okay. So we'll be covering all this. In these first 2 weeks, we'll be covering all these topics. And then I'll share a few important questions from accountancy also, which are very sure to come in the exam. Okay. So be ready with your textbooks, all of you. Let us start. Before we actually start the topic, I'll give little introduction about certain terms here. Let us start with something called as accounting cycle. Let us start with the term accounting cycle. See, what does this word mean? Cycle, I said. Now, what is cycle? Which happens in a repeated manner. Which happens in a repeated manner. That is called as a cycle. Let us say, for example, in the rainy season, it rains, no? Sorry, there is some technical error. Okay, that is why it's happening again and again. Okay. So I was telling about accounting cycle. Like, what is accounting cycle? To better understand it, let us start this way. In the rainy season, it rains, right? And all this water will be deposited in rivers, oceans, sea, isn't it? And again comes summer season. And due to the high temperature, all this water evaporates and it goes up again in the form of gas. Okay. And then it forms into clouds, isn't it? It forms into clouds. And these clouds, when traveling, hit with high winds and they burst. Again, we get rain. Again, that rain is deposited into rivers, seas, ocean. And this cycle happens, repetitively. So we call this as water cycle, isn't it? We call these as water cycle. In the same manner, in accounting, there are certain activities which occur repetitively in the same sequence. Okay, one very important term here you need to know is financial year. See, in normal life, we use a calendar year. Our calendar year starts in the month of January and ends in the month of December. Likewise, in accounting, we have a separate year, which is called as financial year, which starts in the month of April. Let us say it starts on 1st April every year and ends on 31st March of the subsequent year. Okay, so if we talk about the current financial year, it is 1st April 2023. It has started and this will end on 31st March 24, isn't it? So this period of 12 months, we call it as a financial year. For any account student, this period of 12 months starting from April to March is very, very important. Like I said, calendar year is this, and this is our financial year. All the financial accounting, all the financial activities for this 12 months period will be taken into consideration. Now, how does they start? As I said, they will start in the month of April. So the first thing that happens in the cycle is voucher entry. First thing is voucher entry. Next step would be writing journal. After journal, we transfer them to ledger. From ledger, we prepare a statement called as trial balance. After trial balance, we finalize. We finalize the books of account. We close the books of account. That is, see, these three activities, voucher entry, journal, ledger, these will be happening throughout the year. Let us say starting from April to 31st March, these activities will be happening throughout the year. And these two activities will happen on 31st March. That is the financial year ending. On 31st March, we close our books of account. And then again, from 1st of April of the next year, we start this process again. So this will be happening in a cycle. Voucher entry, journal, ledger, trial balance, final account. Again comes April, voucher entry, journal, ledger, trial balance, final account. This is happening repetitively, okay, and in a proper sequence. So we call this as accounting cycle. We are going to learn this entire accounting cycle in this session. Again, in this 21 days program, we are going to learn all this cycle, accounting cycle, starting from journal to final account. Okay. बहुत टाइम लगता है अलेक्सा okay, so let us begin with how the accounts are classified. Please pay attention. Here from your accounting actually starts. Okay, first thing is how the accounts are classified. Accounts are classified in two ways. One is called as the traditional approach. One is called as the traditional approach, and the other one is called as the modern approach. Okay, one is traditional approach, the second one is modern approach. As per traditional approach, accounts are classified into three categories. I repeat, as per traditional approach, accounts are classified into three categories. One is personal account. Second one is real account. And third one is nominal account. I repeat, traditionally speaking, accounts have been classified into three categories. One is personal account, real account, and nominal account. And as per modern approach, all these accounts have been classified as capital account, liabilities, assets, expenses, and revenue. Revenue is nothing but income, right? So these are the two classifications. One is traditional approach. The second one is modern approach. I repeat, I would request all of you to take a note of this, please. From here on, our actual accounting process is starting. So please take a note of this. Meanwhile, I'll be explaining again. Accounts have been classified into two categories. One is traditional approach. The other one is modern. Traditionally, accounts are classified into personal account, real account, nominal. And as per modern approach, accounts have been classified as assets, liabilities, capital, expenses, and revenue. Okay, now let us learn all these in detail. What is a personal account? How to identify? What is a real account? How to identify? What is a nominal account? How to identify? And each of these accounts are having a separate rule. We call those as golden rules of account. Okay, so that we are going to learn. Right. So I said, traditionally speaking, accounts have been classified into three categories. One is personal account. Now let us see what is this personal account. All the accounts that represent a person, a firm, an organization. Okay, or any institution, all such accounts are called as personal accounts. I repeat, all the accounts that represent a person, a firm, an organization, a company, an institution, all these are called as personal accounts. So I'd write here all the accounts representing either a person, a firm, any company, any institution, any organization, all these are called as personal accounts. Let us say, for example, if I say Raja account, what type of account it is? It is a personal account. If I say Rahim account, what type of account it is? It is a personal account. If I say SBI account, State Bank of India account, what type of account it is? It is a personal account. If I say Tata Steel Company, what type of account it is? It is a personal account. So if you see all the accounts that represent a person, a firm, a company, okay. And one more example, if we want, let us say Reliance Industries Limited, it is a personal account. MS Junior College, it's a personal account. Okay, all these are personal accounts. Similarly, what are real accounts? What are real accounts? I request all of you to take a note of this, please. So what are real accounts? See, every business organization owns some properties, isn't it? They own some properties, or we call them as assets. So all the assets or the properties, all the assets or the properties owned, all the assets or properties owned by a business entity, are called real accounts. They are called as real accounts. All the assets or the properties owned by a business entity are called as real accounts. Example, let us say machinery account. Suppose there is a production house, they are into manufacturing something and they are having machines. So those machines are an asset to the company. They fall under the category of real account. Suppose a business is having some furniture to be used in the business. Those are real accounts. Suppose business is having, let us say, cash also. Cash is also a real account. Okay. Then coming to nominal account. Is this clear, all of you? Personal account, real account, and the third one is nominal account. See, every business will incur some expenses and earns some incomes, isn't it? Whoever is doing a business, they are doing business to earn something. So there will be a inflow of cash, income, and similarly there will be some outflow of cash, that is expenses. So all the expenses and losses, all the expenses and losses or incomes and gains are nominal account. They are nominal account, right? For example, like any business house pays salaries to the employees, it is a nominal account. It's an expense, it's a nominal account. Similarly, suppose they are a rented building, they are paying some rent, so rent account is a nominal account. They are paying electricity bill, they are paying telephone bill, they are paying some advertisement, all these are nominal. Suppose they are receiving bank interest, they are receiving interest from bank, interest received, this is a nominal account. They are receiving some commission, that is a nominal account. So if you see, all the expenses incurred and all the incomes received, earned, I should say, are nominal account, right? Take a note of this, please, all of you. Second page है क्या? Second page. Okay, so personal account, real account, nominal account. I repeat once, personal accounts are the accounts, those are related to the name of a person, firm, organization, institution, company. Example, Raja, Rahim account, SBI account, Tata Steels account, Reliance Industries account, okay, Yashoda Hospital account, Bajaj Electronic accounts, all these are personal accounts. Then real accounts, all the assets or properties owned by a business house are real accounts. They are the properties. Example, machinery account, furniture account, cash account, like this, land and building account, motor vehicle account. There can be many number of. Then nominal accounts. Nominal accounts are all the expenses and incomes and all the expenses and losses or incomes and gains are nominal. Okay. As I said, each of these accounts, that is personal, real, nominal, they are having a separate rules of their own, which we call them as golden rules of each of the accounts. So now let us learn this. These rules are very, very important for us to write the books of account. When we write the books of account, when we pass the journal entry, the first step in accounting, these rules are going to help us a lot. So we have to learn these rules for each of these accounts, that is personal, real, and nominal, and to understand also. So let us go to that part. Okay, so I thought of then I said next time maybe. Okay, so I was talking about the golden rules of all the three accounts. I repeat, personal account. So you have to learn these rules. If you are perfect with these rules, then only you will be able to pass the general entry. And general entry is the foundation of your entire accounting. Okay, so the first rule for personal account is debit the receiver, debit the receiver, and credit the giver. Debit the receiver and credit the giver. Sir, what is this debit and credit? I'll tell you. Receiving aspect is debit and giving aspect is credit. Debit is receiving aspect and credit is giving aspect. Or I'll tell you one very simple thing. Debit is the left hand side of an account and credit is the right side of an account. Simply. LHS is debit, RHS is credit. Left hand side is debit, right hand side is credit. Okay. So again, debit means the receiving aspect, credit means the giving aspect. This is the rule for personal rule. As I said, learn this. Take a note of this, all of you, please. Then real account. Real account. Debit what comes in. Debit what comes in and credit what goes out. Credit what goes out. For real account, the rule is debit what comes in, credit what goes out. And for nominal account, the rule is debit all expenses or losses, debit all expenses or losses, credit all incomes or. My dear students, this is the foundation for your accounting. Unless you are perfect in all these three rules, you will not be able to pass general entry, which happens to be the original book of entries. Okay, so take a note of this, please, all of you. Personal account, the rule is debit what comes, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. For nominal, debit all expenses or losses and credit all incomes or gains. Okay. Now let us see some transactions and try to identify the accounts. Hope you all have taken a note of this. Yeah. Now let us see some transactions. Suppose I say paid cash to Rao rupees 5,000. Okay, this is the transaction. I'll take one more. Purchased stock rupees 10,000. Received commission rupees 1,000. Now remember, we all follow double entry book system, isn't it? We all follow double entry book system. Now, what is double entry book system? Double entry book system is for every debit, there is a corresponding credit. Like if you remember in physics, we have third law of motion. For every action, there is a equal and opposite reaction, isn't it? For every action, there is equal and opposite reaction. In the same manner, in accounting, we have this. For every debit, there is a corresponding and equal credit. That is, if any account is debited with a certain amount, then some other account should be credited with the same amount. Okay, so for every debit, there is a corresponding and equal credit. Now let us see in this transaction, and every transaction will affect two accounts. As I said, we are following double entry book system. As per double entry book system, every transaction will have a debit aspect and a credit aspect, isn't it? So let us identify what are the two accounts affected in this. Okay, so paid cash to Rao is a transaction. In this, there is one account which is affected, it is cash. The other account affected is Rao, isn't it? The two accounts affected here are, one is cash and the other one is Rao. Now you see what type of account is cash. Just now I told you, no, accounts have been classified into three categories: personal, real, nominal. Tell me, will it be personal? Answer is no. Is it nominal? Then again it is no. Is it real? Yes, it is real, because cash is a asset. Cash is a property of the business. As I said, all the properties are categorized as real account. So cash is what? It is a real account. Cash is a real account. Then Rao. What is Rao? Is it a real account? No. Is it a nominal account? No. Is it a personal account? Yes, it is a personal account, because Rao represent a person. And as per my definition, as per the meaning I have given, all the accounts that represent a person is a personal account. So this is a personal account, right? Okay, we could identify it very easily, isn't it? In this transaction, there are two accounts. One is cash account, the other one is personal account. Cash account is a real account and Rao account is a personal account. Now coming to purchase stock. Purchase stock. What are the two accounts here? Okay, the two accounts here are, one is purchases The other one is, no, it is not stock, but it is hidden account, that is cash. When we are purchasing something, obviously we will be paying cash, no? Either we'll be paying cash or we'll be making payment through bank, isn't it? So there is an outflow of cash. So one account is a purchase account, the other account is a cash account. What type of account is purchase account? Now, when we are purchasing, we are incurring an expense. So purchase is a nominal account. Purchase is a expense, and all expenses are what type of accounts? They are nominal account. Right? Then cash. Just now we have seen, no? Cash is a property of a business. As such, cash is a real account. Cash account is a real account. Okay. So very good. Next, received commission. What are the two accounts affected here? The one is, no, it is not received account. It is commission account. One is commission account. Again, we have a hidden account, that is cash account. And commission is, again, we are receiving commission. So here commission is a income. Okay. So all incomes are what type of accounts? They are nominal accounts. And cash again is a real account. Okay. We have to first identify what are the two accounts affected. Then we have to pass the journal entry for this. Okay. Have a look at this, please. Only if we are able to identify the accounts, okay, and apply the rule of debit and credit, then only we'll be able to pass the journal entry. So to have a command on journal, to be perfect with journal entries, we have to have this perfection of all the three accounts and their rules. Okay. Okay. Let us practice a few more. Say, purchased machinery for cash rupees 50,000. Purchase machinery for cash rupees 50,000. Then paid salaries rupees 2,000. To Mohan rupees 21,000. Let us try to identify what are the two accounts affected and apply the rule of debit and credit. Okay. So purchase machinery for cash rupees 50,000. What are the two accounts affected here? One is purchase account, machinery account. The other one is cash account. Sir, why are you not taking purchase account? Remember, purchase account is affected only when we purchase stock or goods. Whereas if you are purchasing some fixed asset like machinery, furniture, motor vehicle, in that case, purchase account is not effective. I repeat, purchase account will be effective only when stock is purchased or when goods are purchased for resale. If you are purchasing any fixed asset, then that fixed asset is affected, not purchase. So in this transaction, one account affected is machinery account, the other account affected is cash account. Machinery again is a real account. Recall once, what are real accounts? All the assets and properties owned by a business are real account. So machinery is an asset, isn't it? So it is a real account. In the same manner, cash is again an asset of the business. So this is also a real account, right? So in this transaction, the two accounts affected, both are real. One is machinery, the other one is cash. Both are real. If we apply the rule of debit and credit, what is the rule for real account? Recall once, debit what comes in, credit what goes out, isn't it? Debit what comes in, credit what goes out is the rule for real account. So in this transaction, when we are purchasing machinery, machinery is coming in the business. So debit what comes in? So machinery account is to be debited. And cash is out. There is an outflow of cash. Cash is going away from the business. Credit what goes out. So cash account is to be credited, isn't it? So machinery is debited and cash account is credited. We have applied the rule of real account because both the accounts affected in this transaction are real. And the rule of real account is debit what comes in, credit what. Okay, good. Then paid salary. Paid salary. What are the two accounts? One is salaries account. What is other account? Is it paid account? No. The other account is cash account. Remember, whenever there is a nominal, I say, whenever there is an expense or an income, whenever there is an expense or an income in this transaction, cash account is hidden. Cash account हमको दिखता नहीं. Cash account is a hidden account. It is an implied account. It is an account by default. I repeat, हमारे किसी भी transaction में अगर nominal account affect हुआ है, the other account affected would be either, whether it is expense or cash, it would be a cash account. This cash will not be there in the transaction. You have to make it yourself. You have to understand this, that whenever there is a nominal account affected, the other account affected is implied cash account, or it can be bank account also if the payment is made through check or Google Pay or something like that. Okay, so here the two accounts affected are, one is salaries account, the other one is cash. Salary is what type of account, if you recall, as per our categories? Personal, real, nominal. Tell me, is it personal? Answer is no. Is it real? Answer is no. Is it nominal? Answer is yes. Because for any business organization, salary paid is a expense and all expenses are nominal. And the second account affected is cash account. Cash is a real account. All the assets and properties are real account. Now let us apply the rule. Here one account is nominal and the other account is real. Let us apply the rule of debit and credit for nominal. For nominal, what is the rule? Debit all expenses, credit all incomes. Here in this case, when we are paying salary, salary is an expense. All the expenses are to be debited. So salary is to be debited. Then cash. Cash is a real account. What is the rule of real account? Debit what comes in, credit what goes out. So in this case, when we are paying salary, cash is going out. So whatever goes out is to be credited. So if you see in this transaction, salaries is debited and cash is credited in accordance with our basic rule. Double entry book system follows every debit has a credit. So every transaction will affect two accounts. One is to be debited and the other is to be credited. Okay. So all these transactions are fulfilling our rules now. So let us go to the next one. Sales to Mohan. What are the two accounts affected? One is sales account. The other account is Mohan account. Sale is a revenue. Sale is a income, isn't it? Sale is a income. So it is a nominal account. Sale is a nominal account. What is the other account? Mohan. Mohan is a personal account. Recall once. What are personal accounts? What are personal accounts? Accounts related to name of a person, firm, all these are personal accounts. So Mohan is a personal account, right? Now let us apply the rule. For nominal account, what is the rule? Debit all expenses and credit all incomes. In this case, sale is a income. Sale is a income and incomes are credited. So sale is to be credited. And Mohan is the person, when we are selling to Mohan, Mohan is receiving. Okay, he is the receiver. Receiver is to be debited. So debit Mohan and credit sales account. Okay. 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 Now let us go to the next step. That is the first topic which we are expecting an exam, that is journal. Okay. This is the first step in accounting process, or let us say accounting cycle. Okay, what is it? It is journal. Now let us see what is a journal. You take a note of this, please. Journal is a book of original entries. Journal is called as the book of original entry, or it is also called as book of prime entry. It is the book of original entry, or it is called as the book of prime entry. Whenever any transaction takes place in any business organization, whatever transaction takes place, whether it is purchase, sale, salary paid, rent paid, commission received, any sort of transaction, financial transaction, that is first recorded in the book called journal. And it is recorded in an order called as chronological order. Chronological order. Okay. So I repeat, what is journal? You may get it for 2 marks. Journal is a book of original entry or prime entry. I repeat, journal is a book of original entry or prime entry, and it is recorded in a chronological order. Chronology means date wise. Chronology means date wise. जो transaction पहले हुआ उसको पहले record करेंगे in the sequence, in the order of dates. So chronology means date wise, right? So journal is a book of original entry or prime entry. All the transactions are recorded in chronological order, and the process of recording entry into journal, the process of recording any entry in journal is called journalizing. Again, this you can expect for 2 marks, please. Okay, as and when we come across any such questions which are expected, you please take a note of this. We may give this for 2 marks. What is journal or what is journalizing? Now, what is journalizing? It is the process of recording an entry in journal is called journalizing. Okay, so let us learn how these entries are recorded in journal. Okay, we are now learning how these transactions will be recorded in journal. As I said, journal is the first step in accounting process. Journal is also called as the book of original entry or prime entry. This is the first step in accounting process. Okay. Now, a journal is having 5 columns. A journal, the format of a journal is, it will be having 5 columns. A journal has how many columns? A journal has 5 columns. The first column is date. The second column is particulars. The third column is ledger folio. We call it as LF. Next we have debit amount and credit amount. This is a format of writing journal. This is a specimen of journal. On the heading we write journal entries in the books of. The name of the form we write journal entries in the books of. Whatever the name of form is given in the question, that we write. Now let us get to know about these 5 columns. What are the 5 columns I said? First one is date, particulars, LF. LF stands for ledger folio. LF means what? It is ledger folio. LF is ledger folio. You'll come to know what ledger folio is. After generalizing, if you remember in accounting cycle, I told you, no, what is the second thing? It is ledger. After journal, we post it to ledger. So we write the page number here, but for us, while doing problems, we don't have to write anything. Let us leave it as it is. Okay. Then, so in date column, what do we do? In date column, how many columns I said? 5 columns. Date, particulars, LF, debit amount, credit amount. 5 columns in journal. In the date column, we write the date of transaction. Whenever the transaction has taken place, the date we write. Suppose if we are recording anything today, today is 22nd May. So I would write 2023, 22nd May, and I'll record the transaction here, right? So in the date column, we record the date of transaction. Then in particular columns, if you remember, before this, we were having a little exercise on identifying the two types of account, debiting, crediting. So here we capture what is the account which is debited. We will capture two aspects. What do we write here? We write the two aspects. What are the two aspects? One is the debit aspect and the other one is credit aspect. I'll show you while doing problems, how do we actually record it. So in particular columns, we are recording the actual transaction, identifying the two accounts. One is debited, the other is credit. In the LF column, as I told you, we don't write anything. We'll simply leave it. And in debit amount, we write the amount. Here also we write the amount. Okay. So this is how a journal looks like. Take a look at it. How many columns? 5 columns. Journal has 5 columns. Date, particulars, LF, debit amount, credit amount. I'll take a very small question and try to explain you how do we pass the journal entries. Is the columns okay with you all? 5 columns? Okay. We'll record the transaction here. 2021, January 1, sold goods rupees 20,000. If you are asked to generalize this, what is the transaction? On 2021, January 1, sold goods rupees 20,000. If we are asked to write a general entry of this, what do we do? First, we have to take this transaction and identify the two accounts. What are the two accounts here? One is sales and the other account is cash. One is sales and the other account is cash, right? Sale is a revenue, it is a income, and incomes are credited. Cash is a real account. Okay, cash is a real account, and as per the rule, debit what comes in, credit what goes out. When we are selling goods, we are receiving cash. So there is an inflow of cash. So it is to be debited. So how would I write this in the journal entry form you see? Okay. I'll write like this: 2021, January 1. Pay attention, please, how to write a journal entry. In particular columns, we capture both the debit and credit aspects. So how do we write? You see, I said cash is to be debited and sales account is to be credited. So I would write like this: the debit aspect always is to be written first. हम लोग पहले क्या लिखेंगे? डेबिट और क्रेडिट में पहले हम लोग डेबिट एस्पेक्ट लिखेंगे. So cash account debited, cash account debited to sales is to be credited to sales account. What is the amount? 20,000, 20,000, right? So this is how we write a general entry. The debit aspect we should write first, and then we should write the credit aspect. Is the general entry over? The answer is no. We have to write a brief note about this. What is this transaction? What is this entry for? This is called as, what I am writing now is called as a narration. What I am writing is a narration. Without narration, a general entry is incomplete. So what do we write in narration? We write a brief. This should always start with the word being. Being sales made. Being sales made. Or being goods sold. Whatever you can write something which gives information about the entry. Now this general entry is complete. Now this is a complete journal entry. Suppose I give note. Paid rent rupees 1,000. Paid rent rupees 1,000. Now, what are the two accounts in this? The two accounts in this are, one is rent account. And remember, I told you, no, whenever there is a nominal account, there is a hidden account. There is a nominal, there is a hidden implied account which is called as cash account. Obviously, no. If you are paying rent, what you are paying? You are paying cash or you are paying a check. So either it will be a cash or a bank account, but mostly will take cash account only. So when I say paid rent, it has two accounts. One is rent, the other account is cash. Rent is a nominal account and rent paid is a expense, isn't it? Rent paid is a expense. Expenses are to be debited. And when we are paying rent, there is an outflow of cash. Cash is going out as per the rule. Debit what comes in, credit what goes out. When we are paying rent, cash is going away from the business. So it has to be credited. So what is to be debited? Again, let us say this is date 5. Then I should write January 5th. What is the debit aspect? Rent. As I told you, in any general entry, we should first capture the debit aspect. So I'll write an entry like this. Rent account debited to cash account. Rent account debited to cash account. What is the amount? 1,000. Is the general entry complete? Again, the answer is no. What is missing? Narration is missing. So we have to write a narration. As I said, narration should always start with the word being. So how it would be? Being rent paid. Being rent paid. Now this is a complete journal entry. Okay. Now the time is up. We'll continue this topic tomorrow. Tomorrow, you be ready with your textbooks. We'll be solving problem from your textbooks. Okay. So with this, our session comes to an end. You be ready for your next class, that is civics. Okay. So, okay. Good day. Take care. Bye.